What's going on, everybody? It's Stas here. Welcome back to another video. So today we're going to be talking about the top 10 stocks to buy in this brand new week, in this brand new year of 2021. And I hope you all had a great New Year's Eve, New Year's Day, and have an even better 2021 as a whole. I know I'm super excited to get this year started. And we're also going to be talking about in this video what the markets did last week. We're going to be looking at the S&P 500, breaking down some technicals, and if you guys stick till the end of the video, maybe, just maybe, if you're lucky, I'll go over some bonus stocks as well. So if you all like the video, hit the like button, subscribe to the channel, make sure to also join the Strive Smart Discord chat and Facebook group, link down below. You could also get 4 stocks from WeBull, maybe $10 from Coinbase. All of those are also linked down below as well. So let's get the party started, guys. What happened last week? Well, last week was a crazy week where we hit all-time highs twice. We can see here on the S&P 500, we hit the first all-time high at 37.55. That's where we broke out of 37.45, that resistance from the previous day. Hence the all-time high, right? We broke the previous all-time high, hit a new all-time high, and we pretty much coasted for the rest of that day and the next day following that first all-time high. And then on Friday, was it Friday? No, it was not Friday, guys. It was on Thursday. The market went up like crazy. S&P 500 went up from 37.30 all the way up to 37.60, hitting yet again another all-time high. And we can see here on the 5-day, 5-minute, the S&P's under a pretty big resistance. What we see here is it's at that all-time high resistance from a couple of days ago, right? At 37.56. In fact, we actually hit 37.60 and we pulled back towards the end of the day. You can see here on the intraday chart, and mind you, it's not a big pull down whatsoever, but we can see we pulled down from 37.60 and we closed right under that old all-time high, which again is a resistance. So that is one point for tomorrow to keep an eye out on for sure. And by the way, guys, look at the futures market. I can't cover them today because I am filming this video before the futures market opens. And by the way, it opens at 6 p.m. Eastern Standard Time. But look at it. Look at what the S&P futures are at. NASDAQ, Dow Jones futures, are they gapping up, gapping down? Are they flat? And look at what's going on pre-market. Of course, the market opens at 9:30 on the East Coast, but pre-market tells a story, right? It tells us what is likely to happen. Not always, but it kind of paints an early picture of what the day is going to be looking like. So make sure to pay attention to the futures and pre-market, what's going on, to see direction and kind of see where it's going to go, at least in the beginning of the day. And when we look here on, let's say, the yearly chart S&P, actually, no, that's not a good example, but this 20-day chart S&P, what we're looking at is this is an uptrend that's really just starting to hit that higher high. And mind you, you can see here we hit that higher low on Friday, and we ran into the end of the day, which was that push for the higher high. But the point I'm trying to make here is if we break out of 37.60, we can reach up even higher for the higher high. And maybe go 37.70, 37.80, and maybe to that 3,800 level. I'm not sure if that's going to happen on Monday. That would be crazy. Tomorrow, right, if that were to happen in one day. But if we got there maybe later this week, I think we could maybe get 3,800 S&P. And we'll see, guys. Nothing is guaranteed, but we're just talking hypothetical scenarios here. So watch out for those levels on the S&P 500. And let's get into now the bread and butter, what you guys all want to see, the 10 stocks that I'm looking to buy right now in January 2021. Again, Happy New Year, everybody. This is going to be a great year. And this is honestly the list that I've compiled for this week. I think this is a pretty good list. So stock number 1 is Qualcomm, ticker symbol QCOM. This is one that, if you guys see, has been on an uptrend for the past 6 months. There's no doubting that. It's very obvious. From $71 to $161, we've gone up double and some, right? Riding that 180 SMA and this 50 SMA. And what we are seeing here as well, if we zoom in a bit, all the interesting action has been in the past month, 2 months, ever since the beginning of November. What we're noticing here is, and I mentioned this in a previous video, but if you guys missed it, we'll talk about it again. What we're noticing is it's setting up for either a breakout if it breaks above 153, if that ascending triangle-esque looking pattern here that we're seeing, if that plays out, meaning we squeeze out of 153 since we're making higher lows into that resistance, right? If we squeeze out of there, we could see a move up to 160, and honestly, I think even higher than 160 if that were to happen. And that, from where we are now, that alone would give us about 4 to 5% to play with if you're buying straight up shares. And of course, if you're buying options, depending on what time you're picking, your time horizon, and your strike price, it really depends. But you can leverage your money for where that 4% in shares, you can make more in options. You can make anywhere from, and this is hypothetical, I don't know exactly, but we're talking hypothetical, right? You can make, let's say, maybe 15% or 20% if you're playing certain options and Qualcomm were to burst out like that. And don't get the wrong idea. I mean, buying shares is most likely, honestly, almost always safer, right? It depends on the strategy. And options are not for the beginners, I would say, right? So don't just get it twisted. Oh, you can get more returns on options. You can, but there's a lot more risk, and it's just a bit more difficult starting out. So if you're a beginner, I wouldn't just jump into options. Honestly, I tell a lot of people that. I just stick to shares, and with Qualcomm, you can get about 4% on that move. And another scenario that might happen, as you guys can see here, that's if the uptrend breaks, if these moving averages break on this hourly chart, or this is actually the 4-hour chart zoomed in. If we break that and we start to make maybe a lower low, that could be the completion of a head and shoulder that we're seeing. Left shoulder, head right here, and then the right shoulder. So be careful with this one, guys. But I think the confirmation of the breakout would be again above 153, probably above 153.50 to be safe. So I'm going to set on alert right there for right now. So Qualcomm is very interesting for me. I'm watching that. Stock number 2 here is going to be Upwork, ticker symbol UPWK. And this is one that you guys know, if you're a long-term viewer of my channel for at least half a year at this point, which is a lot of people, let me know down below. This should be interesting. Drop a comment. How long, I'd love to know this, guys, seriously, how long have you been watching my channel? Let me know in the comments down below. But about 6 months ago, we were talking about Upwork when it was around 15 bucks, 17. I remember they had a good earnings report. I think it was this one. Was it a bad earnings report? No, I think it was pretty decent. But the stock went down a lot. It was overblown. And we traded it there a couple times. And we were talking about how, hey, look, 17 bucks is a big resistance on Upwork. If it breaks out of there, it could see a big run. And did I think it was going to run this much? Absolutely not. But we saw a big run from there. And ever since that point, I mean, it's gone bananas, right? It's gone from, $17, $21 back to $18. They saw a good earnings report, turned a profit. It ran up all the way to $40. That's crazy. And now it's trading at about $34. So it went down about 6% on Friday or Thursday. Friday, the market was closed. It went down a good chunk. And if we zoom in a bit here on the 4-hour action, what we notice is it broke 36.50, right? That was a resistance, and mind you, we called this move out as well. I mean, take a look here on the hourly, or you probably can't see it there. Let's go back on the 4-hour. We called this out too, the ascending triangle. If you guys watch the channel, you know that as well. We saw that there was a resistance at 36.50. We were uptrending into that resistance, right? And then we ultimately squeezed out of 36.50 up to $41. Now we pull back down. We broke 36.50. And now, honestly, guys, I think we're going to make a play on this 180 SMA. I think that's where we're going to end up bottoming out. And I'm not some futuristic seer. I'm not this guy that can, has the crystal ball where I'm like, it's going to bottom here. But I think it has a good chance, let's put it that way, at bottoming at about 32.50, maybe 33. And this right here could be maybe a dip buy off this moving average for maybe a nice pop back into the mid-30s, maybe back into the 40s, right? So watch out for Upwork. This should be interesting heading into this week. The next stock on the list is Romeo Power, which, if you guys didn't know, this actually just changed. I think this might be the first day on Monday. Let me know if I'm wrong, but it was just RMG last week, and now it's RMO. It's a SPAC, right? It went from RMG, now it's trading under Romeo Power, ticker symbol RMO, and this is a company that manufactures lithium-ion battery modules and packs for commercial electric vehicles. And we know how crazy these EV plays have been, the SPACs and the stocks in general, right? The ones that weren't SPACs, like Tesla, for example. These stocks have been crazy, and this one here has been very crazy as well. This one is included in that list of crazy. This one went from about $10 to $40 in the span of a month and a half, and now it's cut in half. I mean, it's gone from 10 to 40, from 40 to now 22. It went down 15% on Thursday, and I can see this being a dip buy, quite honestly, as crazy as that sounds. I think this sell-off is slowly getting exhausted. We can see here on the 4-hour chart, if we zoom in a bit, right where it's at right now at 22.50, this should be a big point for tomorrow to keep an eye out on. If this is able to hold, I think we can see a bounce back from there. Likely, right? Because that would be the hold of the uptrend that you're seeing on the 4-hour. If this breaks on the flip side, right, it could very well break. We don't know. If it breaks, look for the gap down to the teens, maybe 17, 18, maybe 19, maybe 20. Maybe it goes down to 20. But if this uptrend breaks, I can see the sell-off continuing. So watch out for that. But also, look and see what happened a couple days ago when the sell-off got exhausted. We saw a pop from 25 up to about 30. So we can see a relief rally before we dump off to the teens. It really depends. But overall, I think this dip is worth watching on RMO. There's a lot of hype behind these stocks, and if you're somebody that doesn't like too much risk, just forget about this. Just don't even listen to what I said the past minute on RMO. But if you're a bit more risk tolerant, you're not scared to jump into some crazy swinging stocks, hey, RMO could be for you. There's definitely some money there to be made. So the next one is going to be EA, which, again, we called this out a couple months ago. You know, I was in this one. I held through some pain. Ultimately, I made a profit on it, and it's going exactly as I thought it would. We were downtrending for a couple months from 147 down to about 120. We held 119, 120, popped up, broke 128, broke 134, all of these levels we've mentioned on the channel, and now we filled up the gap to 142, which was a resistance from back in July and from back in the end of August, and now we're breaking 142. Now it looks like EA is going to be gunning for those all-time highs at 147, and you guys know I called this as well. I think it was last week in one of the videos. I make so many videos, guys. I talk about these stocks every day that I forget when exactly I talked about them. But you can see here another kind of an ascending triangle, right? Or a wedge, whatever way you see it. I mean, you can see here we were kind of uptrending into that resistance at 142, 143. And on Thursday, we burst out of it. I said that the other day, bursted. Apparently, that's not a word. I didn't know that till somebody commented that the other day. So if you're watching this, thanks a lot, because now I know burst is the word, not bursted, burst. So EA now burst out of 143, and it's at 144 now. And I think there's some more upside due to that resistance break, and I wouldn't be surprised if EA were to go to 147 again, maybe even 150, make a new all-time high. So watch out for EA. That is interesting. SBE is another one here. Switchback Energy. This is one that we were watching last week. We saw the higher low here at about $36. We saw another ascending triangle. It squeezed out of 39. We called it there. It rallied up to about $43. Broke that. I saw a move that honestly I wasn't expecting. I didn't think it'd get as high as it did. It got to $50. And it sold off from there. Now it went from 50 down to about 40, trimming about 16, 18, 20% of its value. And it's holding $39 again, right around $40 again, which is an old resistance. So I think this right here, right around the 50 SMA as well on the 4-hour chart, I think this for SB could be a dip buy, honestly. And if we're seeing some price action positive for the bulls, we're seeing some gap ups tomorrow in the session, that could be a good indicator that this one wants to go back mid-40s. And I think there's a lot of potential from 40 back up to the mid-40s. So SBE is pretty easy of an easy chart to understand. CRM on the flip side is one that's going to be interesting. We'll talk about that in a second here. But before that, DKNG, which honestly, this one's interesting as well. I mean, CRM and DKNG are both pretty, not the best looking charts, but I think they're both worth watching, right? So we can see here, DKNG, there's a clear top at 56, right? It got rejected there, and ever since then, it's down, as of now, $10 a share. That's a lot, guys. That's about 17%. That's no joke. So DKNG is almost in a bear market, as crazy as that sounds. Anything, a stock ETF index that sells off from a peak more than 20% is considered in a bear market. So we're seeing that here with DKNG. And one thing that I don't like, I was watching it last week, but then Friday or Thursday, I keep messing that up. Thursday, we saw the dump off. But before that, I was liking how it was holding the 180 SMA here on the 4-hour chart. But now that it broke it, I'm not liking that too much. I think there is some downside here on DKNG, which again is why it's not the prettiest chart. But I think 45, maybe if that can hold, which is the next support coming up as of now, 45 holds, that is where I could see a relief rally in DKNG, maybe back up to $50, $49. So watch out for that. This is a bit oversold. I'm not going to lie. You can see it on the RSI yourselves as well. I mean, it's at 28. And that's pretty oversold if you guys know the RSI. So that's DKNG, so watch out for that one. CRM is another one here, guys, which is funky. We're seeing resistance at about 230. That was a support back in September and back in October. We obviously broke that support, making it a resistance. And now, ever since, it's been a month. Ever since the beginning of December, this one's been stuck between 218, 220 to 230, right? We've been religiously trading in that range for the past month, and we got rejected, support, all that good stuff in the past month. And at this point, yet again, we find ourselves at 220. So I think I don't want to say there's limited downside on CRM, because if it breaks 220, we can get a big gap down. But I think there's more upside. I'll say that. I think there's more upside here than downside. And I think from 220, we could see a move to 230 this week. That could be about 3%. And honestly, I think I'm going to be optimistic. I think we're going to get above 230 with this one. I think 230, if that breaks, which I think it will. And again, don't just buy this because I'm saying I think it will, but I think it could. And if it does, that is where we're going to see, in my opinion, a pretty sizable move, probably back up to 240, 250. And I think there's even some headway up to 260, but I don't want to get ahead of myself. I want to wait and see what happens this upcoming week. So I'm watching SBE very closely and DKNG. And there's a couple more here, guys. We have NIO, NIO, which is another one you guys must watch this week. We have NIO Day coming up on January 9th, which is 6 days away from today, which should be 5 days away from Monday. And I'm not sure what day that is. Let me check that. Is that on the weekend? It might be on the weekend, which might be even crazier. Yes, it is. It's on a Saturday as of now, January 9th. And I'm not sure if they can change that or whatever, but January 9th, NIO Day. So this week, heading into the weekend, NIO is going to be one worth watching. There's going to be a lot of hype, a lot of volume, And if you guys take a look at what happened last week, this is huge. We broke $48. We broke 50. We got to 50-50. We got to a higher high in the uptrend. This is great stuff for the bulls. And we actually pulled down and we held $48.75, $49 as a support into the close. So for tomorrow, what must happen for the bulls to maintain their momentum is NEO needs to get past $50. It needs to break $49.50, and maybe not tomorrow, but this week in general. It needs to break 50, and I think if it does, and I've been on the channel saying this before, I think heading into NEO Day, we might see a rally in NEO, the stock, from $50 to $55. Do I think it gets above $55? That's a bit, I don't want to say overly optimistic, but we'll just say it. Overly optimistic, it gets over 55. But from 50 to 53, 54, maybe 52, 50, I can definitely see that happening this week. So I'm watching NEO for that, for this gap that is unfilled. I think it could be filled from 48 to 55. I think that is where we could be moving this week on NEO. And Li Auto, I've been getting a lot of questions on Li Auto. In terms of technicals, I'm not nearly as bullish as I am on NEO. But Li, it still has some potential. It's down a good chunk. So this is in the relief, I don't want to say relief rally category, but we'll put it in the category of it's beaten down. It needs some sort. It could see some sort of upside movement if the right technicals break. So we're down 40%. On this 4-hour chart, we're still under the main moving averages, both the 50 and the 180 SMA. And one thing here that's a bit worrisome to me is we're seeing a bearish cross on the 4-hour chart, meaning the 50 SMA has crossed below the 180 SMA. What that signals is there could be some downside to come. There could be this bearish trend. This could be going on for a little bit more, and it has. We haven't broken out of the moving averages quite yet. We hit a lower low in the downtrend last week. We hit $27. Now we popped up back to that 50 SMA. So this is a level to watch for Li Auto. If we end up gapping down tomorrow or this week in general, pushing for those lows from last week and breaking them, that is not going to be a good sign if you want to go long, if you're looking to swing trade it, if you're bullish on the stock. That would not be good, obviously, right? And on the flip side, I think Li, again, it's in the beaten down category. I think this could be a nice relief rally catalyst, or not a catalyst, contender. I think we could see a nice pop if we were to just break out of this downtrend. And once that does happen, hey, I'm all for trading Li. But at this point, I'm not jumping the gun yet. We're still in a downtrend. There could be some more downside to come. I'm just being honest, right? And Tesla, on the flip side, as crazy as it sounds, I think there could be some more upside to come. Upside, you heard me right. Because we broke a big resistance last week on Thursday. We broke 690. We hit an all-time high at 718. We pulled down, and we held 695, 700 as support at 705. And we're holding this EMA on this 4-hour chart. So I think as long as 700 can hold, we could see a nice push on Tesla stock, for Tesla stock, maybe up to 720 again to test those highs, maybe back to 725, 730 if those all-time highs break. I just think overall, the trend on Tesla is very bullish. Ascending triangle, we broke out of that. We filled the gap from 660 to 698, broke that. That's just so bullish, guys, especially if we get some volume kicking in, some momentum. I think this could honestly, I don't like giving too lofty of a price target. I know I give price targets a decent amount of time, but I think we can hit 740 on this, maybe 735. But overall, I mean, that's in the short term we can see that, maybe. But overall, I think when we're looking at the grand scheme of things, I like Tesla under 600. I mean, that would be great if it were to get down to this 180 SMA on the 4-hour chart. But I'm probably dreaming. That's probably not going to happen. But if it does, you better consider that a buy, at least in my opinion. At 580, 600, I think that could be a decent price for a dip buy, for a swing trade, and so forth. I think that could be nice. And the last one here, AMZM, before we get into some bonus ones, and if you guys stuck till the end, Let me know. And also, again, don't forget to answer this question. How long have you been watching my videos? I'd love to know that. Feel free to comment that down below. The last stock here is Amazon, AMZN. This one is pretty bullish, and I'd love to see, I can't wait to see what the holiday sales are going to be for this week for Amazon and for a bunch of companies for that matter, guys. I want to see how this holiday season was with you-know-what going around. A lot of the lockdowns are still in place. People aren't as, they don't want to go around as much as they used to a year and a half ago. So I want to see if Amazon benefited heavily from this. I mean, obviously they have been, but I want to see their holiday quarter in specifics, in particular here, to see how that one did. And technically speaking, Amazon's breaking out. We actually took out 3,200. We broke this wedge. We filled the gap as of last week to about 33.40, 33.80 to be exact. We hit that higher high in the uptrend. You can see it here on the 10-day 30, which is great. And now we're actually pulling down a bit. Looks like we want to hold a higher low here on Amazon at about 32.50. So I think this could be a nice dip buy this week from 32.50 back up to 33.50. That's about a 3% move there, and maybe we squeeze out into the 3,400 level. I think that is very likely to happen. And again, guys, do your own research. This is my opinion, but I'm seeing a lot of pressure being built up slowly here to that 3,400 resistance. This also kind of looks like an ascending triangle, so watch out for the break even out of there, maybe up to 3,500. I've said that before on the channel. I think Amazon's going to 3,500, and honestly, I'm going to stick to it. I really do think there's a lot of potential for that. So let's do a couple bonus ones here for this week. We have Square. Square is a huge one for this week. This one's down a good $30 from its peak, down about, over 10%, 12% to be exact. And we're right around this old resistance at 215, right around that 180 SMA 4-hour chart, which, mind you guys, that held on, what was that, last week, one of the days it held that. So watch for a bounce out here. We can maybe see a relief rally in Square since it's beaten down over 12% in this past week. MasterCard's another one. This one broke out of this downwards wedge on this 4-hour. It filled the gap up to 357, 360, which is a resistance from back in October and back in November. So I think if 360 can break, we might see a big move up to about 370, maybe even higher than that. So MasterCard's one with a lot of momentum, worth watching. Apple is another one here on the dip, right around this 50 SMA 4-hour chart. I think we could see a nice pop from 132 up to maybe 140. That could be about a 4 or 5% move in Apple. And let's see here, guys. What else do I have? Maybe CIIC. That's one worth watching. It's down about $10 from its high. This is another SPAC. It's taking a rival public, right? We talked about that before. So watch out for this one. This is a bit more volatile, a bit more risky, but I think there's a lot of potential there. And same with CRSR, Corsair Gaming. Watch out for this one. I think if we hold 36, we could likely squeeze up to maybe 40, 42. That is where I see this thing going. So that's pretty much it. Hope you all enjoyed this video. If you did, make sure to hit that like button, subscribe to the channel, and also leave a comment. Let me know your thoughts down below in the comment section. I would love to know. And don't forget to also join the Strive Smart Discord chat, the Facebook group, which are free of charge, by the way. And you could also get 4 stocks from WeBull down below, $10 from Coinbase, and also $10 from M1 Finance. So get your free money, join the free communities. I'll catch you all in the next video. Thanks for watching. As always, stay safe out there. Happy New Year. Hope you guys crush 2021. Thanks for watching again. I'll catch you all in the next video. Peace out.